Thank you, Nisha. Hello, everyone. Thank you for joining us today. It's hard to believe that's already been a year since I took over as a CEO. They say time flies. It did really fly for me. When I look back at these 12 months, I can see clear progress across many areas. We won two mega deals this year. It's clearly a strong sign that our large deal engine is working and continues to expand. In fact, our clients have responded well to our consulting-led AI-powered industry and cross-industry solutions. This is reflected in the strong growth in top accounts and also large deal bookings in financial year 25. We have continued to invest in our people, skilling them for the new AI wave. Our execution rigor with speed definitely has been acknowledged by our clients. And that's reflected in the clear improvement in our client satisfaction scores. And we have done all of this while strengthening our margins. It's a meaningful achievement in the context of such ongoing change. The global industry environment remained uncertain for most of the year. And of course, the recent tariff announcements have only added to that. Before coming to Bangalore, I've been speaking to clients across sectors and across markets to understand how things are playing out on the ground. Even though the underlying demand for the tech reinvention remains strong, our clients are approaching it more cautiously. They are focused on cost, speed, and of course, AI-led efficiency. And that's exactly where we are leaning in. And we see this as an opportunity to move with purpose, make smart bets, and stay committed to our 5 strategic priorities. I want to say this: driving consistent, profitable growth remains a clear priority for us, and we are focused on making that happen. With that, let's look at our Q4 and FY 2024-25 performance. All the growth numbers I share will be in constant currency. Our IT services revenue for Q4 was $2.6 billion, reflecting a sequential decline of 0.8% and 1.2% on a year-on-year basis. The order book for Q4 was at $4 billion, which is a growth of 13.4% sequentially and 10.5% on year-on-year basis. Our operating margins came in at 17.5%, which is flat sequentially and 110 basis point expansion on a year-on-year basis. And for the full year, IT services revenues were $10.51 billion, reflecting year-on-year degrowth of 2.3%. Our operating margin was at 17.1%, an expansion of almost 1% as compared to FY24. Now let me talk about our strategic market unit performance. Americas 1 grew 0.2% sequentially and 6% on a year-on-year basis. Americas 2 degrew 1% sequentially and 1.8% on a year-on-year basis. Europe degrew 2.5% sequentially and 6.9% on a year-on-year basis. APMEA grew 1.0% sequentially and degrew 4.9% on a year-on-year basis. Now moving on to our Industry sector performance. BFSI degrew 0.5% sequentially and grew 0.8% year on year. Healthcare degrew 3.1% sequentially and grew 0.1% year on year. Consumer degrew 1.3% sequentially and was flat year on year. Technology and communication degrew 0.9% sequentially and 1.1% year on year basis. Energy, manufacturing and resources grew 1.1% sequentially and degrew 7% year on year. Finally, Capco continues to perform well, growing 6.5% sequentially and 11.5% on a year-on-year basis. Let me now provide an update on our strategic priorities. As I mentioned earlier, we are continuing to see strong momentum in large deals. In quarter 4, we closed 17 large deals with a total value of 1.8 billion across our markets and sectors. In fact, for the full year, we closed 63 large deals for a total value of $5.4 billion, which is a year-on-year growth of 17.5%. Let me highlight two recent wins. One, a global technology leader has chosen Wipro for a major 5-year transformation program. In fact, we will deliver AI-powered end-to-end IT services, completely reshaping employee experience for almost 200,000 employees across countries. Our solution involves proactive support, intelligent self-service, and personalized digital interactions. In my second example, with our recent partnership with a leading global food distributor, we are taking over their entire IT infrastructure and corporate applications, which also includes HR, finance, and legal systems. We are leveraging AI solutions, and we will drive automation and simplify user interactions. This will result in higher efficiency, lower costs, and better user experience for our client. As we all know, AI has been part of deal conversations for a while, but this year, it has actually become central to almost every opportunity, big or small, helping drive productivity and efficiency. This reflects a broader shift we are seeing across the board. Let me now move on to large accounts, the second strategic priority. We continue to focus on our large accounts in our core markets and our priority sectors. In quarter 4, our top 5 accounts and top 10 accounts grew 0.3% and 1.1% respectively on a sequential basis. I want to share an example that shows our momentum in these strategic accounts. In quarter 4, a leading Indian private bank expanded strategic partnership with us as part of a business-focused digital transformation. We will provide AI-powered solutions to strengthen compliance management, addressing the critical need for regulatory compliance, while also enhancing the overall experience for this bank. This will help the bank boost operational efficiency and realize its growth ambitions across various functions. We continue to create significant impact for our clients through our consulting-led, AI-powered industry and cross-industry solutions. In this context, let me talk about a recent win in the aviation sector. In quarter four, a well-known Pacific airline chose Wipro to modernize its crew management and operation system. In fact, we were selected for our proven ability to future-proof the client's IT platform with AI. We will deploy our own TOPS platform to manage end-to-end crew operations, providing a unified, scalable solution that enhances experience and drives sustained operational efficiencies. Alongside all of this, we have put even more focus on client centricity, and it's starting to show results. Our latest third-party annual customer satisfaction survey shows clear improvement in overall satisfaction scores and also NPS. In fact, I want to thank our teams for making this possible. Thank you. You have heard of this. We have realigned our global business lines effective April 1st to meet our customer needs better. In fact, this change will help us deliver stronger business outcomes for our clients. Finally, just as important, supporting and growing our global talent has been a top priority all year. If you remember, last quarter, I spoke about our focus on leadership development and how we are building future-ready leaders through the Wipro Leadership Institute. In fact, we have moved our top performers into key client-facing roles to ensure continuity and stability. And we have launched a sponsorship program this quarter to help them succeed. Now, a note on guidance before I wrap up. Given the uncertainty in the environment, we expect our clients to take a more measured approach going forward, especially on two spend areas: large transformation programs and discretionary spend. With this in mind, and based on our current visibility, we are guiding for a sequential growth of -3.5% to -1.5% in constant currency terms. With that, let me turn it over to Aparna for a detailed overview of our financials. Aparna, over to you. Thank you.
Good evening, ladies and gentlemen. Let me share a quick update of our financial performance for the quarter ended 31st March 2025, and then we can open it up for questions. Our IT services revenues for Q4 sequentially declined by 0.8% in constant currency terms, which is within our guidance range. For FY25, our IT services revenue declined by 2.3% in constant currency terms. Our rigorous focus on execution has resulted in an operational improvement that has ensured that our margins have been steadily improving over the last 5 quarters. For Q4, our margins expanded 1.1% on a year-on-year basis. Our reported margins were 17.5%. This brings our full year operating margin expansion to 0.9% over FY24 margins. As we enter FY26, like Srini said, we are faced with headwinds on an uncertain macroeconomic environment that is putting a downward pressure on our revenues. That said, our endeavor will be to maintain the margins in the narrow band in the coming quarters. Our net